Hello traders, and welcome to this live intraday strategy webinar. Happy New Year to everyone in the room. Hope you all had a wonderful holiday and wish you the best in 2017. Today is Tuesday, January 3rd. Good to be here with you guys after a long break to start off a new year. So, looks like we're starting off a new year with the same story. Dollar continuing to rip higher. Thank you, Pooja, Adam, Graham. I appreciate that, guys. Great to see you as always. Henry, good to see you in the room as well. Horace, Mark, Happy New Year to you all. So let's jump right in. Like I said, same story as we closed off the year. Dollars rebounding off a support near 101.80, 102.05. We'll go over those levels in just a moment. I want to remind everyone we do have the initial data for, I guess, the year at this point on tap at 10 o'clock. We get ISM numbers. So do keep that in mind for the dollar crosses. We're going to want to start off the year a little bit light. We'll be tiptoeing around some of these setups until we get some more clarity on directional biases. Some very interesting levels that we're approaching both on the Aussie crosses, Aussie dollar and Aussie yen, both at interesting junctures. We'll look at euro pound. Gave you an update on that last night. Dollar yen, very interesting with what dollar yen's doing. I want to see how this is going to start the year. Continuing to really be a dead step lock with the Nikkei. We'll take a quick look at both of those. Obviously, dollar CAD is on the menu. I didn't highlight that last night because I wanted to see how we opened up the week here. It's a good thing we did see that breakout in crude. We'll look at that as well. And you're seeing that put some downside pressure on dollar CAD as well. So those are the setups I have on the menu. As always, guys, throughout the course of the session, questions, trade setups, specific pairs you want to review, feel free to throw them on the message board at any time. Okay. So some interesting stuff I was just looking at last night as we start off the year. You know, the relative performance for the dollar on the whole for 2016, very interesting. You can see that, in fact, the commodity block was the outperformer throughout the course of the year. Most of the gains, you know, you're looking at the dollar index here at 14-year highs, near 15 years high, closer to 14. But that was mostly by way of losses in the pound and the euro. And you can see that CAD, Kiwi, Yen, Aussie, all top performers versus the dollar for the year on whole. As we noted in the last webinar, here's the relative performance for the CAD looked like, the loonie against all its major counterparts for the year. You saw that the Canadian dollar was actually the top performer, was stronger against all its major counterparts for 2016. Very interesting story, and you're seeing crude continue to break higher here. Theo, great to see you in the room, says, I'd like to look at pound yen and pound dollar if you didn't mention it. Yeah, I wasn't really interested in pound start off the year just from where we are. We'll definitely take a look, though. Pound dollar and pound yen. Gotcha. No worries. Okay. Also, one thing I did want to note is, look, you know, the dollar has been ripping ever since the election. Here's the election day. You can see, obviously, the breadth of the magnitude of the advance that we've seen has been quite impressive. As it stands, the markets aren't really pricing in Fed expectations. If we look at the dot plots from the latest interest rate decision where they hiked by 25 basis points, the Fed is actually projecting 3 to 4 hikes even heading into this year. Markets are still not even pricing in a full hike yet. You can see that the first expectation for or the highest, I want to say, probability expectation for an interest rate hike isn't until June, and that's still at only 46%. Okay, this is Fed Fund futures. Now, this will change as we say, even intra-week, you can see fluctuations in these Fed Fund futures. So we're going to continue to track those. But I just wanted to bring this to your attention that the markets, as far as the dollar is concerned, hasn't really priced in those expectations. Now, if you ask me personally, we came into 2016 expecting 2 to 3 hikes. We got 1. So who's more off, the market or the Fed? I guess that remains to be seen. Nonetheless, there is room for adjustment. There is room, like I said last night, for further upside here as the market, plays catch up, let's say, with those expectations from the Fed. So just keep that in mind. I'll bring this to your attention as we see variations in Fed Fund futures. Okay, here's what the dollar index looked like last night. Here's what we look like now. You had a little gap on the open. We filled that gap. You saw a little pullback to open up Asia trade, and then we ripped higher, again taking us through that 103.21 level. Last year's high, I guess you got to say at this point, comes in at 103.65. listen, a topside break here, and this is not necessarily an intraday trade, guys. This is just kind of a broader outlook. A topside break here, guys, there's really no levels of significance that I've been able to identify besides slope. And if you take these lows, same slope that we've been working with just off the low from last year, you know, that gives you a target near 105 at this point on a break higher above last year. Above that, 1989 high comes in at 106.56. So again, not going to get overly excited. We're going to see how the year opens up. 103.65 last year's high. We're going to watch that as near-term resistance. As far as the gap fill, you know, that game has already been sort of exhausted at this point. What we would need to see to get some sort of material correction in the index would be a break below the support that we rebounded off of yesterday, 101.80 into 102. The momentum signature still remains bearish. I just want to note that. You know, you've been getting some divergence as price action has continued to make a higher high, higher high, higher high, a series of lower highs in momentum. You did see a trigger break late last week on that drop below this trendline support. I want to see how this next couple of days are going to pan out. This still could be an exhaustion trade, no doubt about it. But keep in mind, we're still, you know, basically covering that slope on the way down here. All right, so just a quick look there at the dollar index. Again, this is the ICE dollar index, which carries a basket of 6 currencies, very, very heavily weighted the euro. So keep that in mind here on that index. Questions? All right, that's number one. Let's jump into the Aussie. That's sort of where my focus has been to start off the year so far. Here's what the Aussie dollar daily looks like. And the main focus here is that we're coming off of that slope support. It's been a messy move. I can't really say I'm excited about how this reacted down here. But, you know, you give it a one-day close outside the realm of that formation. You don't want to freak out just yet. Point being, you're basically at a very interesting juncture right now. This is the 618 retracement of the entire 2016 trading range. Okay, you saw us break below that, acted as resistance on a closed basis. We couldn't get back above it. I want to stay bearish Aussie below 72.80. Okay, that's not only last year's open, but pretty darn close to those swing lows that you made back here in June, and you have the 50 line for the current operative formation converging there over the next couple of days. So not too surprised to see some upward bounce here. As I highlighted last night, we were at support to start off the week, but you know, largely looking for a more substantiated rally to get short. Not really interested in playing the long side of Aussie dollar just yet. Okay, I don't want to get too aggressive on short dollar exposure. Here's what it looks like on the intraday charts. So, long story short, bearish invalidation at 72.82 to start off the month and the week. A break below 71.60, basically the lows that we made for December, really puts you back on focus to 70.88 and more of a critical Fibonacci confluence at 70.43 into 70.58. This is going to be the 786 retracement of that yearly range, as well as the 100% extension just from the near-term decline off of those November highs. So big, nice region here from a Fibonacci standpoint, near-term resistance and bearish invalidation, 72.82. Here's what the intraday chart looks like. Hey, Conwell, great to see you in the room. Says Happy New Year, Michael, and all. Sir, today, indeed, your levels and range for nat gas and copper. Thank you. I don't know if I have anything on nat gas. I'll bring it up and take a look, Conwell, but we'll take a look at copper, too. Let me write that down. You're going to want to pick Jamie's brain on nat gas. I think he follows it a little bit closer, nat gas, but we'll take a look. All right. So even on the intraday chart, again, this is the 4-hour, okay? You can see a really nice range setting up just above last month's low, just above the lower median line parallel. These tend to be really nice moves. Again, on a topside break, this is sort of the realm of which I'd start to look for re-entry on the short side, and it's going to remain our near-term bearish invalidation level. So still think you might get some more upside here on Aussie dollar, but largely looking for short triggers heading into that 72.82, 72.80 region. Here's what it looks like on the 2-hour. Again, momentum's still pretty constructive off those lows. Found some support in that overnight, right around 50. And again, using your weekly opens and your monthly opens, use that to your advantage now. The weekly and monthly open right now come in right here. You can see nice little pivots in intraday price action around that level. Again, use that as a launching point as we head into the US session, see if that holds a support for one last thrust higher. Questions on Aussie? It will be pretty heavy focus for me on the Aussie just to start off the year because of where we are relatively speaking in trend. Very big level here. Now, an interesting play for Aussie on the other counterpart would be Aussie Yen. This is something also I've kind of been stoking out since the start. Wanted to see how we open up, the week and the year, and we're looking at this rally coming right into a near-term resistance target near 85.54. So for Aussie Yen, here's what the daily chart looks like. If you guys recall, we were all over this last month. 87.55, 87.30 was such a huge region of resistance. I really can't stress it enough. You had the yearly open, the 50% retracement of the decline off the 2014 highs. You had the 1618 extension from the ascent off the lows. You had the median line for the formation off of the yearly lows. Lots was there, and you can see the perfect tag, touch, and reversal off that region. What do I expect from here? I want to see what happens at 85.50 if we get up that high, which is why I think Aussie can probably see some more upside. Again, I don't want to get aggressive on trying to get long the yen per se, but if this region of resistance holds and that median line, you might expect one last move to the downside to sort of tag median line support here before resuming higher. Long story short, if we make it above 85.50, look for a resumption or at least another rally towards that high that we made in December. Big region. 87.55, 87.50 still critical. And at this point, I do want to use last month's low as sort of a near-term bullish invalidation level. So it might be a nice opportunity here if you do get a kind of failure to break through this region. Look for momentum exhaustion. Look for a move lower. Largely speaking, you're still in the sort of breakout of that multi-year formation that we broke out of last year. Remember, we're only a month out of that break, or 2 months out. So if we see a break sub 83.75, it's not the 2016 low day close, you look to play that correction way down lower near 81, near this confluence of major longer-term moving averages, 80.30 into 80 handle. So largely focus is here, 85.50 into 83.75. That's sort of your range of focus to start off the month and the year. Any questions on Aussie dollar or Aussie yen? Not necessarily going to be playing Aussie yen on the intraday just yet, but we'll be looking to see what that reaction holds if we do get one last spike into that 85.76 region. Okay, next up on tap from last night was Euro Pound. Here's what Euro Pound looks like on the daily chart. And here's what we look like last night. So, as I noted, the focus, let's start off on the daily, the focus to start off the week and the month and everything was basically near-term support near 85. You had a 50% retracement from the rally off that last low that we made mid-month on the 16th of December. And you also had the 50 line for this long-dated formation that we've been in off the 2015 lows. Okay, both of those were right there. And if we broke below them, look at this on the intraday. Here's a 240-minute chart from last night. Really, I mean, you're looking for a move back towards that 83.50 level. That 38.2 retracement that we sat on for weeks and weeks and weeks also converges on the lower parallel at this point. And that's really, also converging on the 200-day moving average at this point. So I do think Euro Pound is at risk for further losses from here. Bring your attention to the fact that momentum turned just ahead of 60. It's not a very constructive outlook near term. I do think you can see some further losses here. Not necessarily Euro weakness. in my humble opinion. More so, I think we can get a little bit more of a substantiated rebound in the pound. But either of those scenarios, you'd expect to see euro pound trading lower. Here's what it looks like on the intraday. Okay, we're sort of messing with a break below that now. Okay, so I am, again, if we rebound, you'd look for near interim resistance right back up here into the 85 handle. But at this point, you want to start to stress these retracements a little more. Okay, so we're at the 618. Again, near-term resistance 85. Downside break, you're still looking for 84. And a little bit more of a critical area of support as you get near 83.50. Grandpa trade finally showing us some price action here. If you guys recall last, earlier in the month, on the 20th here, we were looking higher in euro pound. Okay, and here's the formation that we had sort of eyed out heading into the 21st, and that last topside target was 86.25. It's exactly where we kind of ran through late last week and pulled back from. So same levels, nothing's changed. We just readjusted the retracement on this near-term advance from the 20th. We've taken out that target, we're pulling back, and we're basically looking to see if this breaks. If this lower median line breaks, which it looks like it's doing, look for a drop into longer-term, more critical structural support near 83.50. Questions on euro pound? Okay, last but not least from last night, dollar yen. Some interesting price action in dollar yen to start the year. Okay, and keeping things in perspective, we're going to go over the pairs that you guys requested today, but I just want to take a little bit more of a larger stance, right? It helps to start off the year and month, quarter, to get a little bit more of a broader picture of what's going on in price. Dollar yen has actually been relatively clean. I mean, heading into the end of the year, this kind of slow decay in price was very, very, boring, let's say, to try to trade intraday. But the levels are pretty clean. This same key range, 115.15 to 116.08, which was our target on the way up, I thought we were going to get a much more substantiated pullback off that. Obviously, that didn't materialize. Broke above it, perfect rebound to support, and moving higher. I still don't want to get too excited. Major key resistance isn't really still until 120.18, 120.06 in my humble opinion. That's last year's open. That's the 786 retracement of the entire decline off the highs they made. Excuse me, the highs they made in 2015. And sort of would be a pretty big barrier to get through for dollar yen. If we take, I'm going to take a quick segue here. I want to take a quick look at the Nikkei. Nikkei price action looks very, very similar. Guys, I haven't touched this chart since last year. This is the same pitchfork formation that we were looking at. Again, if you recall, very similar to what happened in dollar yen. We came into this big region, 1859, 18,590, 18,580, huge region, nice Fibonacci confluence, 618 off the high, 100% off the low. Really clean, right? You got to pull back off that level. Once we ruptured through, that's where the conviction comes on the breakout. Look where the pullback found support, right at that same median line. So it looks like we're working with the proper slope. This has got a bigger barrier here of resistance at 19,636, 19,676, and that's sort of the region to look for the breakout. Okay, topside break, you're looking for 2026. Is basically the highs that we made back in November of last year. Right, I gotta stop saying that. 2015 would be 2 years ago at this point, but you get the picture. Now, this is going to be a nice tell, I think, for dollar yen. Okay, if we go back to dollar yen and do a quick overlay of the Nikkei, takes some adjustment, but if you get it, scale it, you can see price action has been pretty dead on, right? So I'd be watching this analog very closely as far as trying to ascertain a little bit more of a medium-term directional bias here for dollar yen. I do think you could still see another stab at the highs. As far as risk assets are concerned, guys, the Trump rally continues to be sort of the focus. Jamie has some very interesting charts. I want to, not the last swing report, guys, but the one previous. Jamie has some very interesting charts on the S&P. I would definitely take a look at that. And there's definitely an argument to be made to be very cautious on the long side. The fundamental story hasn't changed. We're looking for more pro-growth policy. We're looking for more fiscal stimulus and lower regulations, all of which are supposed to spur further economic growth. So the fundamental underlying story of stocks, of risk assets, of broader market still remains pretty positive. And I don't want to get overly bearish on it. From a price action standpoint, though, there is some concern of some exhaustion here. So keep that analog in mind with the the Nikkei and the dollar yen. Base case scenario, you still need to be looking out for a constructive approach on this while above 115.50, 116.08. This is the barrier you need to break below to get more of a corrective outlook. As long as we stay above this, you're looking higher. Topside targets 120.06, 121.68, and 122.77. Questions on dollar yen? Hey, Eileen, great to see you. Happy New Year to you as well. All right. That is Nikkei and dollar yen. 2, 3, 4, 5, 6. Dollar CAD, number 7. Sir, today's range of dollar yen. Oh, so Conwell, I'm sorry, I didn't even take you to the intraday charts. Here's what the intraday charts look like for dollar yen. I didn't post this last night because I don't think we have such clear-cut structure on the near term so far. I was working with a little bit of a flag formation on this. So just to show you, I was kind of looking at this. You didn't get 2 touches on the lows there, but that converged on that 618 retracement. So still highlighting 115.50 as the major key support here for dollar yen. On a topside breach, 109.43 would be a target, Conwall, but I wouldn't treat this as an intraday trade, okay, because of where you are in trend. The broader trend is at, fresh multi-month highs. If you break higher from here, you don't want to trade this intraday. You want to hold on to it. I think you get a rally up into 128.06, 120.18. That's not marked here on the intraday chart, guys, but that's sort of the region of which I'd start to look. Actually, let me put this back. There we go. That's sort of the region of which I'd be looking for a little bit more of substantiated resistance. Look, Conwall, for today, right now, heading into US, you're basically at resistance, okay? I don't know if you want to try to buy a breakout, but if it breaks higher, look for that rally into 120.02, 120.08. Make sense? Sir, your daily ranges are excellent. Cheers, Conwall. I think the daily charts are much cleaner as far as trying to ascertain major pivots in price, right? That's why we highlight them. On dollar yen, trust me, when there's a clean intraday range, guys, or clear intraday structure to an advance or decline, you're going to see me highlight that all the time. But if I'm putting just the daily charts, kind of just bringing your attention to where we are in larger trend and some major key levels to look at. So, yeah, we'll see how dollar yen, if we can make it through these highs here, start off the year. Okay, let's jump into your questions. Those are the setups I'm highlighting to start off the year. Again, we're going to be a little bit cautious and a little bit light-toed here to start off the week, the month, the quarter, whole new start. So let's see how things sort of pan out as markets get underway. You get full market participation returning slowly, right? Everyone's still on break. You had a lot of portfolio closing out positions into the end of the year. You saw that spill in stocks. We'll see how things get underway as we get full market participation again. Question was from Theo on British Pound. Here's what the pound looks like on the daily chart. I wanted to go over dollar CAD first. Let me do dollar CAD first. And I'll jump right into this for you, Theo. So dollar CAD will be number 7. Here's what dollar CAD looks like on the daily chart. Nice bounce today. It came off of a basic 38.2 retracement of the advance that you saw. Basically, this is the December range that this retracement is representing. And for dollar CAD, you're heading into a scenario here. I don't want to even mutter the words. I know that Jamie wrote it in his report, but you know me and people starting to call double tops before we actually make anything technically significant. So yes, we have matched the November highs. We did that heading into the end of December. You saw a very strong reaction off that level, and we're coming right back into basic near-term Fibonacci support. I do think on the divergence that you saw into the highs here, price action making a higher high. Remember, you only want to take a close basis. So indeed, a higher high was registered, and the momentum barrier made a lower high. Both of the reference points sub 70, and the closer these are, divergent points to 50 tend to be pretty strong signals. So right off the bat, you're seeing signs of near-term exhaustion and momentum. Add to that, and I'll take you into the crude charts in just a moment because I do think that has bearing here at this point. You really can't get too excited on this being a double top until you at least start to get below 132.50, 132.78, in my humble opinion. You'll have the 100-day moving average there in a couple of days. This is also the highs they made from July of last year and the key 618 retracement of that near-term advance. So that's sort of the major key support I would need to call, or at least see break, for me to start referencing this as a more concerted double top. It's really this break that would confirm it, but we'll take this one step at a time to open up the month. The near-term charts are really, I think, where you need to focus on dollar CAD. So here's what we looked like last month. This is the same setup. No levels have been changed except for the retracement that we just added here. Remember, the breakout above 132.78 it was really 132.65, but in general, this was the level of which invalidated the short side bias in dollar CAD, right? We were in this nice descending formation, boom, break to the top side. So I'm going to get rid of this at this point. Rally failed at the highs. Look where the pullback is. To start off the month, quarter, week, 134 is sort of my barrier that I'm looking for as support. It's the basic 38.2 retracement, former trendline resistance. Nice breakout here. Did charge a nice advance. So again, I like that slope, and that same slope is now offering some support on convergence with that 38.2. So I'm not surprised to see a little bit of a bounce here. I do think it may pop a little higher, but I am looking for an opportunity to get short in dollar CAD. With that said, 34 needs to break. You need to see a break of this. At this point, it'll also be a break of the weekly objective month opening range. And that would shift the bias a little bit more to the downside, my humble opinion, targeting 133.40. And this key region here, like I said, 132.65 went to 132.78. You can scratch this at this point. So looking for opportunities to sell this early in the week. If we do get a more concerted rebound to the upside, one thing I do want to just take stock of, and again, this is an hourly chart. Let's just take a quick retracement here. $34.90. Yeah, $34.90 into 35. Sort of an area of initial resistance you start to look for. I would need a break above 35.16 to invalidate the short side near term. But right now I'm looking for this advance to give me an opportunity to get back on the short side for dollar CAD. Let me also just see what this looks like real quick. Yep. All right. So an interesting trade definitely to start off the year. Looking to see if we can fade some sort of near-term strength on dollar CAD. So Eileen, great question. Where are your thoughts about dollar-CAD relationship with oil at this point? So I do think you get continued strength in oil if today's close materializes above this break. This is a big break here, guys. Conwall, this is for you, my man. Here's crude. Okay, this is big for me. 764 retracement. This is from the decline off the highs that you made in 2015, specifically in May. You also see a nice pivot high here from February of 2015. So both of those converge on basic slope resistance. And this slope right here is derived from these reference points. 1, 2, 3 points confirm the slope, extrapolated off the high. You got a rejection there. We close just below it. Here's the break. Okay, if today's high, Eileen, or if today's close does materialize above 54.29, I would call that a breakout, right? You'd be looking for a rally to stretch into 56.49. You'd be looking for that rally to stretch into 58.56, which are subsequent topside targets. And that should keep a floor under dollar CAD. Or let me take a step back, keep a floor under CAD, which would limit topside for dollar CAD. So, you know, for me, if that materializes into a break, I'd be looking for that near-term break, like I said, below 34 to sort of validate that, this region here. And you'd be looking for those downside targets at 33.40 and 32.78. But certainly the risk is there for sure. You know, I don't want to get, like I said, I don't want to get excessively, you know, excited about shorting the dollar in general, right? Because you're just ripping here. But on a story of dollar weakness or on an approach, if you are holding long dollar exposure, this would be the one I'd be looking to sort of fade some of that. And especially if that crude price does materialize with that close up there, I do think you get further strength in the CAD. Caldwell, I'll do it for you, May. He says, sir, I have a request. If you kindly keep nat gas and copper on your list to give us some of the awesome daily ranges that you work out. I got it, Caldwell. No problem, man. We will take a look at that in a moment. Any questions on dollar CAD or crude at this point? Yeah, this is pretty big for crude. This is pretty big for crude. A quick reminder, I do see some new names in here. I want to welcome you guys on board. If you ever have, or if you ever want to take a picture of any of these charts, there's a camera button in the top right-hand corner of your screen. You can take a snapshot of any of the charts you see presented throughout the course of the session. So just a quick reminder for those of you who might be here for the first time. He says, I'm out of crude. COT is high. Yeah, it's been continuing to climb, right? And certainly there's questions to be said. Are we seeing that irrational exuberance? I don't really quite think it's there. I think we're kind of teetering there. If you were watching CNBC this morning, everyone's coming on board saying buy stocks, everything's still cheery. And that's kind of when you want to start to take a little bit more of a reserved stance. But, you know, it is what it is. I can't fight the trend. If it closes above 54.20, I think you have further top side to go. Now, keep in mind, momentum is knocking on the door at 70, and last time we came and approached 70 was right here, okay? And like I said, you did see further highs start to materialize before you start to get an exhaustion pullback. You know, could be the play here. I don't know. But all I do know is that a close above 54.20, I do want to keep that top side focus sort of in play. What would I need to get bearish crude? Very, very simple. It would need to be a push and close below, at this point, what it would be considered the yearly open, the weekly, monthly, and quarterly opening range lows, basically the low for today, which comes out at 53.80. A break below that near term would certainly cause concern for a bit more of a correctionary stance in crude. Here's what it looks like on the 4-hour chart. Okay, so that same pitchfork comb wall that we added last month, still in play. Still in play. 55.68 near-term resistance at that median line. And again, a topside break, you're looking at those same topside targets from here. Horace says EuroCAD would be an alternative to dollar CAD. Not a bad idea. I love where your head's at. EuroCAD, absolutely. Now, I don't really, again, have near-term price action on hand here for EuroCAD. Let me update this for you. 236, we'll get rid of that. This is a key 618. This is a major break we talked about last month. The only thing I would be concerned about near term on dollar CAD is I want to see a break of this, which we're knocking on the door right now, because you also have a momentum trigger here that's basically sitting on support. So I'd actually want to see what this looks like in today's close. Just give me 1 sec with this, Horace. I want to see if there's any fibs there too. Okay, yeah, so I'd be looking at support right here, 34.46. Basically, it's exact, I think, low that we made today. The low was 39.49. So we're right there. So this is what I mean. I do love the idea that you're talking about, Horace, on euro weakness, continued euro weakness. Specifically, if we get that CAD strength, this would be a beautiful trade to the downside. Last year, I got to keep reminding myself that last year here in November, this was huge. And we were tracking this, if you guys remember, very closely. The entire decline from the break below 44 was massive. This is a basic trendline support off of December of 2015. 1 touch, 2 touch, 3 touch, 4 touch, 5 on a closed basis. Once that gave out, and specifically once he tested it as resistance, it was game over. And we were working the downside targets. Now heading into the end of the year, you did get a pronounced rally here. And I do also just want to see if we made any type of meaningful okay, not going to stress it. But you saw that break again, the rally getting rejected very strongly at the highs for December into the end of the year, and here we are right at near-term support. You could see a rebound from here, Horace. My whole point and what I'm trying to explain to you is that you could see a near-term rebound. I do think you look to sell that rebound. But to start off the week, I wouldn't go selling. I wouldn't go selling right here, okay, because this is a near-term confluence support. Let's see what this looks like on the intraday chart. He says, yeah, thanks. Hey, more than welcome. Love the trade, though. It's a very good idea. We'll keep this in view. I kind of lost focus on this last year as we started to rally into the end of the year. I didn't really want to try to fight that. Well, actually, let me save that for now. There's that. And there's your yearly, quarterly, monthly open right near 41.33. That'd be near-term resistance. So look for a near-term rally here. Again, immediate resistance at 40.24, but I wouldn't even be surprised if we knock on the door for the yearly open again, the weekly highs. Looking for a rally to sell. Need to get below 39.50 to really get this thing going. And if you do get that break, which inevitably I do think you get, you're looking for ultimately a drop into 37.50. Makes sense, Horace? He says, thanks. More than welcome, sir. That is EuroCAD. Kind of squeeze that one in after CAD. So crude was number 8, EuroCAD number 9. And we are good on time. Let's jump on British pound. So here's the pound, Theo. I don't want to say I'm not a fan because I do like where you are. It's just to start off the week and start off the month, I am looking for a further pullback to get, I think, long. I want to see a rally towards 24.33, and I think that's kind of where you want to see a rally surpassing at this point to really validate a more constructive approach on the British pound. like I said, the immediate bias I still think is lower just on where you are on the near-term chart. So let me just jump into this. Here's the 4-hour. Remember this one, guys? It's the same pitchfork that we were working with in the beginning of December. Here's December 14th high. So big resistance to start off the year and the month held last night or into the open of the week, 123.50 into 123.61. This is a 618 extension from the decline off the highs, and this is a 618 retracement from the ascent off the lows. So we kind of dilly-dallied there for a little bit, broke lower, came into resistance. You also have the upper median line parallel there, and here's the move lower. Getting a little messy on this formation, so I don't want to stress it, but like I said, I do think you can make another low here. Dollar stretches a little bit higher to open up the week, and then you look to fade that for a little bit more of a recovery here in the pound. Would also help that euro pound to the downside, right? And that's why I chose euro pound last night. I think if I want to play pound strength, the possibility of seeing some further pound strength heading into the end of the year, I think you got a good shot against the euro. Theo, does that make sense? Did you have any specific questions on the pound? Here are the levels. If you want to take a quick snapshot of this that I'd be working with near term. Kind of focus right now is on 122.50 into that 123.50 level. If you break lower from here, you're looking at 121.60, 120.88 would be a huge level if we do get down there, again, of which I'd start to look for more strong support, but I'm kind of hard-pressed here to do anything on the pound dollar specifically. Now, pound yen, which is another one that we were following into the close of the year. Hey, Theo, you're more than welcome. He says, "No, I'm just looking for strength in the pound." Yeah, me too, man. We both are. I think we just got to be a little bit more patient and either get a better entry or get a little bit more conviction on near-term momentum turning, which I don't think we have yet. Long entry at 121.60, says Pete. If we get to 121.60, nah. I mean, again, if you get some momentum on near term to give you a long trigger, maybe a bounce. But if we break lower from here, I think you get to the median line. I think you get a little bit lower. And again, that 120.89 level is going to be a little bit more of a key level. We rebounded off that twice post-Brexit. This is back in, what is this, October. And that converges on the median line down a little bit lower. Does that make sense? Is year open this year from January 1st or Sunday open? Depends on the asset that you're looking at, Eileen. Some of the currencies actually did start posting rates on Sunday, which would be the Sunday open, but different assets like commodities, CFDs, those actually didn't start trading until today. So for example, if you go to the oil chart, this is December 30th. This is the first candle for the year. It would be today. Pete, does that make sense? Says, okay, thanks. You're more than welcome. Yes, and day close is still in New York at 5 p.m. You got it. Okay. So that is pound. Pound yen, which is a trade that we were covering into the close of the year, looks like this. What's the name of the indicator that you're using for the yearly open, says Horace. So on my daily charts, you might see there is an indicator here that gives you the monthly opens in purple, and then the yearly opens are actually represented. I actually draw a line there too, but you can get that indicator. It's called... There's a way of getting the name of it, if I can figure it out. Here it is. Code plots, high, low, open, close, daily, weekly, and monthly. It's written by Chris Moody. I know it's a weird name, but you can find it in MarketScope, guys, or excuse me, in TradingView. So just search for this. Or if you type in Chris Moody, he has actually a couple of different indicators that'll come up. You'll find it. There's two of them, Horace. One of them is not very functional, so I wouldn't recommend necessarily getting that. This is the one that I found to be much more functional. Hope that helps. You got it. Pound yen. So another one, I think, if you want to play pound strength, and certainly the dollar yen is still on a constructive approach. We talked about that. There's a risk for a pullback, but it held support pretty well. As long as you stay above that, you don't want to get aggressive trying to mess with a long yen position. That being said, here's a nice reaction, pound yen, right off the 200-day moving average last week. I mean, doesn't get more textbook than that. By the way, the last time pound yen even touched the 200-day moving average was back here. This is 2015 November. Saw a break, instant resistance, move off. Here's a break, instant support, move off. So I do like pound yen higher. I think it's going to give a fake out. We had some crazy radical divergence into the highs. It's been there for weeks. It lasted for months before it actually materialized into a pullback. So I would be cautious below this trend line. Let me just zoom this out for you. I'd be cautious below this trend line, which is exactly what caught the highs that we made back here in June, which is caught the exact high that we made for the month of December. And that comes in ahead of the median line, the upper median line parallel here, right around like 46.80 at this point. So this is sort of the range, let's call it, you'd need to beat to get more of a breakout play. Keep in mind the high day close, okay, comes in right here, 46.70. Constructive above 141.60. Key resistance 146.87 at this point. Broader bullish invalidation. It really has to be down here. I wouldn't want to choke it up anything beyond that, beyond these highs. So 139.40, 139, broader bullish invalidation. So even if you get a drop into this region, I still would be looking for a buy. But this is the level sort of that you need to clear, in my humble opinion, to get the breakout play here in pound yen. It looks pretty, again, this is a constructive trade any way you look at it. It's just, is this high a little bit more of a significant near-term pullback off that? If it does, again, this would be an area of which you'd look for a little bit more constructive play. This would be the breakout that we would need to really validate continuation. Horace, does that make sense? Theo, does that make sense on pound yen? That's number 10, pound yen. What was number 11? Copper and nat gas. Let's take a look at copper here. What are you looking at, Mr. Conwall? Yes, I was looking at some point at shorting opportunities, says Theo. Yes, I will watch it. I'm afraid of pound yen, says Horace. So, so Horace, I don't blame you. It's called the Widowmaker for a reason. It's also called the Dragon, all different types of names. I can tell you from being on the desk all these years, they've some explicits I can't even mention. But I don't blame you for the concern on pound yen. It's a large ATR trade, guys. And when pound yen makes a directional move, it's not typically going to tiptoe like some of the dollar crosses. So, definitely not a pair for the lighthearted, or if you don't have too much confidence on it, that's fine right now. Theo, as far as shorting it, look, on the correctionary plane, let me take a step back here, guys. As far as trying to short it, I do think you're running into some near-term exhaustion I mean, basically around this level, right? This level right here is the swing low that you made back here. It was a pivot break that fueled further declines, and even the highs that we made here are sort of basically right around where we are. From a scalp standpoint, yeah, you could see some exhaustion on a pullback, but just keep in mind these key levels. You know, it's really 41.60. The break below that would be the correctionary play. And I'd be much more interested in possibly looking for a little bit more of a short if we get into that 46.70 region, into here, where we've already seen a very stern reaction on multiple approaches into that median line. So just be nimble to start off the week, but you could get some pullback right off this mark. Yeah, I wouldn't be surprised. Okay, back to copper. That's number 12. So I don't have intraday ranges for copper just yet, but something's kind of staring at me right in the face, so I just want to see what it looks like. Bear with me, guys. Again, this is going to get messy. I just want to see what this looks like. Okay, I don't want to necessarily stress either of these formations right now, but just to give this some color. Interesting. Okay. Okay. So here's what I'd be looking at with this. Taking the daily chart first. Basically, we're trading this as a breakout of this long-standing formation. This is a pitchfork that dates back to 2013 in price. If you basically just take these two trendline supports, you'd be making the same slope. Long story short, this was in my mind, break, test to support, and continuation. Now, the exhaustion into these two highs was very apparent, and we talked about this. The fact that we had really strong divergence. You had it above 70, so you didn't want to get too crazy with it. And in fact, it did materialize. It took a good 2 weeks before it actually turned over, but you got the pullback. The pullback now finding support at former slope resistance, the origin of the breakout, defended again as support, and you're seeing a rebound there right now. So I'd want to be constructive above 244. Essentially, this little cushion area here, also former slope resistance, now support. And you can see, wow, that's a pretty crazy pivot right off that high. 255 resistance. Still sitting at 40 as support. Yeah, so I mean, look, you can make a new low. I think you can stab in that 244 level one more time, 243, this region here. Wouldn't be surprised if you stab into it again, but I'd be looking to inevitably buy that dip. Yeah, so I guess even in slope, it'd be probably better off even deeper than that. So look, this is what I would say. And again, I'm not trading this just as a disclaimer, Conwall, and I'm taking a look at this for the first time for you here. But if you put a gun to my head, I would say near term, the risk is lower, sub 256, okay? Downside targets at 244. I would look for more stringent support. I wouldn't want to be short anymore, let's say that, into 238, 239, into this region. If we drop lower into this region, I kind of don't want to be short anymore. I'd be looking for buy opportunities between 238 and 234. This is a 50% retracement of the advance and former slope resistance. I know price is not filling in here, but you can see that here. Make sense? This would be the breakout that you would need to validate continuation of the broader uptrend, 256. Okay, that would need to be a break above this pivot that we just rebounded off of, or reversed off of, and confluence resistance into that 38.2. Does that make sense, Kawa? Says yes, yes, sir. Thank you. You're more than welcome. Bearish sub 240 near term, the immediate term, like heading into the U.S. Open right now. Yeah, I think you're at risk even below 256. Okay, confluence slope here. But inevitably, that pullback, I think you do want to buy, just based on where we are and the advance that we've seen off that base that we made in 2016. As far as nat gas is concerned, I was looking at this last year for you, huh? Okay, looks like you can get a bigger spill in nat gas. This is the exact kind of divergence that you want to act on. One reference point above 70, one reference point below 70. Very mild divergence in the indicator, but very strong divergence as far as where price is, with the high being a much more substantiated high. Break taking you back below slope, taking you back below a major pivot in price. This is a 50% retracement from the decline off the highs we made in 2014. And I do think you see a little bit more of a pullback in that gas here. Let's look at the intraday. Okay. Sorry about the silence there, guys. Again, I'm signing this out for the first time. He says bearish below 3. Sir, bearish below 3, Conwall? I'm not sure what you mean. We're above 3 right now, right? We're at 339. I think that 3, in my humble opinion, 309, 311, that would be your bullish invalidation. It's an uptrend any way you look at it, right? I don't think anyone's going to argue that. Yeah, if you want to clarify that for me, I'm not sure what you mean by bearish below 3. I would say look for near-term support at 329. I would say that if we find a drop into 309, 311, I'd be looking to buy that. And again, depending on where we are in time, I think the 100-day moving average will be sliding into that region rather soon. This is a nice swing concerted high from the high that you made back in 2015, specifically in May. And then again, the 50% retracement, really nice slope support, resistance, break, support, support, break, break. Each of these breaks fueled a move. So I'd be looking for that drop into this region for possible reentry on the short side. I don't think that we have near-term structure yet. Once we get that, Conwall, I think it'll be a little bit better of a play. I don't know if this is something that you want to rely too heavily on just yet, but certainly it's something that we'll be tracking for the next couple of days. He says, sir, you're correct. Again, Conwall, it's not about being correct, right? It's just about positioning ourselves in a way that gives us the best probability for a positive move here. Guys, I'm going to wrap it up. I am over on time. It's good to be back in the driver's seat, and it's good to be back to start a new year with you guys. Again, I want to thank everyone on board, and we will see you tomorrow morning, same time, same place. Best of luck trading, guys. Cheers. Keep in mind, we do have those ISM numbers from the United States hitting at 10 o'clock, so keep your ears peeled for that. Cheers.